Hello everyone, welcome to Trade. Today we are going to be seeing why support, resistance and trend lines are very important, especially for day trading and even for positional long-term trades. How to determine that and how to take a trade based on that. So let's do some backtesting on Bank Nifty. Before that, I'll show you what is. Let me just give you a small explanation of support and resistance. What is support and resistance, and what is a trend line breakdown or a breakout. Okay, let's just take an example how the price moves in the stock market, right? Up or down. So when you're going up, you make a high, you make a low, you make a higher high, you make a low, higher high, low, and at some point it would reverse, right? So we'll have to determine what is that point of reversal. Okay, see, this is how the price moves on the up direction, where it makes a high, it makes a low, it makes a higher high, higher low. This is very important in stock market, whether the price is making a higher high or a higher low. To determine that, it's very important. You have another higher high, higher low, higher high, higher low. Then what happens? Some kind of resistance comes and the price starts dropping again. So where you see it making lower highs compared to this, okay, that is considered as a change of trend when you start making lower highs. And the same thing applies when the market is going down. Now say a falling market, you want to short the market in futures. And at some point you would get a reversal. Okay, so in a falling market, what will happen is you will have lower high, lower low, lower high compared to this high, lower low compared to the previous low, lower high, and then you will reach some support and the price reverses from there. Okay, so this is how lower low and higher lows play important role on a falling market, and we will have to use this even on even if you're an intraday trader. Checking the higher low and the higher high, the Dow theory is very important. Now what is resistance? Now consider there is a line. Resistance, nothing, is literally translates to, say a price is going up to a certain level and at some point it hits resistance and falls. Okay, so at that point of reversal, it's called resistance. We refer it as the price has taken resistance at this level. We will be doing charts, seeing back testing and looking at some examples. I just wanted to explain about resistance and support. Okay, and so once say price has taken resistance here, there's a possibility when the price comes up next, it might again take resistance here and go down, or there is a possibility it might break out as well. Okay, how to determine that and how to take a trade on that, I'll be showing you. Whether to determine it's a breakout or it's taking a resistance, we'll have to use even price action, certain price action elements to determine that. So this is resistance. When the price goes up, hits a certain level and reverses, and the next time when it hits there, there's a possibility it might reverse, so that would be referred as resistance. This resistance is always dependent on the previous price action. Now say a stock is at all-time high, say it's been sideways for so many years and suddenly it's breaking out. Okay, so it's an all-time high, we won't have resistance, right, to determine the next level. So we can make use of other tools that are available for us for trading to determine the next target. But in such cases, yeah, you won't have any sort of resistance ahead of you. You'll have to make use of other tools like Fibonacci and all that to find the next resistance. Now coming to support, now say a price continuously falls for some reason and takes support at some level. Say this has happened somewhere in, like, say 5 years before, like 2015 or something, and the price goes up, and again there is some kind of a crash and the price falls, so there's high chances the price might take support in this price area again, because previously it's taken support here. So this we refer it as support. Okay, and the reversal we will determine through certain price action parameters. There is a possibility where the support can be broken and the price, sorry, there's a possibility where the support can be broken and the price keeps falling as well. So that is considered as break of support and more bearish. These simple things can be applied even on intraday basis. Now let me show you both support and resistance together in a line diagram. Now just consider a stock that went up, came down, took some support and went up, took resistance, came down, took some support here and then went up. Okay, so what do we have a price action where the price went up, came down, went up, came down and again went up, right? So let me mark this as, so once the price came to this point and reversed, we will mark it as a resistance. Let me just make it a straight line. Yeah, and over here the price fell and reversed from here, so let's mark this as support and let's mark this level as a resistance. So what happened here is, so when the price went here, it took resistance and fell, took support here and went up. Over here it didn't take again resistance at this point, right? It broke through, that is fine. So when this breakout happens, we consider it's bullish and go for a buy because it's broken the previous resistance. It went up, took resistance here again at this level and the price fell. So when the price fell, I have this trend line because previously we took resistance here, so the previous resistance and support can act as support and resistance in future. See here, this line we referred it as resistance, but here the price came and took support here and going up, so this will act as support over here. In case if this had broken down, yeah, we could see further downside and the next targets would be this support over here until here, the S that I marked here. So a resistance previously, a trend line that's acted as a resistance can act as support in future. That is also very important, especially for intraday. We see a lot of times where the moves go up, come down, take support at the previous resistance and again move up. So the point of reversal is determined by inverted hammers and morning star, evening star. Certain price action will be seeing that on the charts. And now coming to trend line, why trend lines are important along with support and resistance. See, there are two types of trend line. One is the horizontal trend lines where it can act as support and resistance. Okay, so it acted as resistance, came down, acted as support, again went up, acted as resistance. So this can be the resistance and support, the horizontal trend lines. And there are even angular trend lines which help us in intraday. Okay, now coming to the angular trend lines. When do we use angular trend lines? That is, say a price is going in this upward direction, so we can have a trend line over here, the red trend line that I've drawn. So basically it's taking support at this angular trend line and moving up. At some point the price, let me just make this thicker, at some point the price just breaks this trend line and continues to fall. So this is considered as a trend line breakdown on the upside, and the same thing on the downside. A stock is continuously falling, so we can have a angular trend line like this. So see, some certain good stocks fall and reverse, right? So we want to know the point of reversal. Not every stock is where it's going to fall and become zero at some point. There are stocks that keep going high, but during the course of the year at some point it will fall. So you want to know the point, determine the point of reversal. We can with this angular trend lines as well. So at some point where it reverses, breaks this trend line, we can consider the trend is changing and look for long opportunities with the with a proper stop loss. I'll be showing you on chart where to place the stop loss. So once this is broken, there are chances it might retest the trend line or directly just break out on the upside. So this is why we use angular trend lines. Okay, now let's go to Bank Nifty chart and just see all these examples that I've shown. Let me take a 15-minute chart, Bank Nifty, so we can get some good examples. So this is more like a backtesting. I would go to previous levels and show you the trades that even I've taken just based on pure trend line support and resistance. See, when I'm sorry, yeah. So this is the chart of Bank Nifty 15-minute chart. So when all this price action was going on, I had few major support resistance drawn and kept. One was this angular trend line. Okay, I had this marked. So anything which broke above this, I would have been bullish. So on this day, it played out very well for us. This trend line broke, we went up, we did book a profits here. It fell, but I was still bullish. This was considered as a retest of a trend line. So after the retest, it again went up so much, right? So this is one classic example of a trend line breakout on a horizontal trend line. See, when we were going up, okay, we went long here, we captured this move, we were going up. So I wanted to find certain levels on the upside, right? So I had these levels marked. Let me just make this thicker. See, I had these levels marked and I expected some sort of a reversal here, but no, we broke through that, and exactly at the next point where I had marked this levels, the price did take resistance there. It didn't exactly touch that point, but so I was looking to short in this area anywhere when I get a bearish price action. The moment I got this red inverted hammer very close to this resistance, just hardly 20 points, that is fine. We shorted and took this good trade on the downside. So this is on a 15-minute chart. Now if you want to see, and this applies for indices, stocks, and any stocks, any indices that you want to trade in. Now you want to see a positional trade. Okay, I'm going to 1 hour. So when this price action was happening here, we could have marked this as a major support because the price took support here, here, here almost 3 times. So when it broke, it almost came and retested and broke heavy. You see the downfall it had after this major support was broken. So what happened here, as I explained earlier, the price came, took support, went up, came again, took support, went up, again took support, went up, and this time it broke. Okay, so yeah, we did short heavily here, and seeing this price action where we got a bullish engulf. We kind of booked a profit expecting a retest. We did get a retest. We came here, tested these levels again, and dropped down hard. See, in live market, when you're analyzing, when you draw a trend line, it might not hit the trend line exactly and reverse. There might be a wick, there might be a short false breakout on the upside and false. See, for example, here, see, even I took this trade where I shorted here because of this bearish, the bearish and the bullish engulf that happened. We exited our profits here, but next day it went retested and again fell. So in this, what happens in the charts when you see in the live market, especially the indices, sometimes it perfectly just touches the support and goes up. Sometimes it gives a wick or some kind of a rejection and then moves up or moves down further. Now coming to more recent charts like today, tomorrow. See, I trade in Bank Nifty, only in Bank Nifty on intraday basis. Now let me show you where the support and resistance like played out very well. Let us take example of last trading session, the Wednesday itself, 12th May. See, when the market was here, we didn't know. See, this was on 11th May, right? It went up, took resistance, fell. Now I'm getting prepared for 12th May. See, the only levels that I had was this, because the price came here, took support, went up, took resistance here. So I had marked these levels and kept. And based on previous price action over here, I wanted to determine the supports. So I had one support here. See, this price action like this is a very tight price action. You'll have many trend lines. So look for the major ones where you got a big up move, probably in this region. So I marked one, and definitely one over here, and probably here. See, because here also we have some support. So these were the, when I come here and check, see, the price took support here, it has taken support here, here it has acted as resistance. So any trend line that has acted as support and previously as even resistance will also play a crucial impact. Okay, so coming on 12th May, so when I was at 11th May, these are the levels that I marked. Since we were moving in a very tight range, I didn't expect a big up move or a down move, but these are the levels that I had marked. So on 12th May, we'll see what happened. See, as we had drawn, the price opened here, so immediately I shorted here on the next candle because the price did go up, take support and started falling. It fell, went up, came down. Here I booked some. See, on the reversal I was, and this is my stop loss. As soon as I entered the high of that candle, I kept it as stop loss. So since my stop loss hit, I was waiting. The second time my target hit and went down, I booked some profits. Then again we went up and we fell. Okay, and this is almost even the second target that I had drawn achieved on Wednesday. So now what about the up move? Like intraday, you need to catch the down move, up move, everything, right? So I was little skeptical about going long here because we have already fallen so much. So I waited to see how the trend moves. We went all the way till here and again took resistance in this area where we shorted in the morning, right? We again took resistance in this area and started falling. So now at this point I did determine that the day is bearish. I will have to look for puts. So it's always better to trade with the trend than against the trend. So since this up move was against the day's trend where it fell, I didn't want to take a call. I waited for the price action to complete. I had this angular trend line drawn the moment the price came here. See, even here the price came down, took support on this blue line, moved up. So I had this angular trend line, red line that I've drawn. I had this marked on the live market, and I had a thought that if this breaks, I'll go for short. And say since we are quite volatile these days, where we have up move, down move. I had an angular trend line even on the top side in case we break out, because we are getting some good news on the COVID side where the cases are reducing and stuff. So you'll never know how the market reacts to that. So if this had broken down on the upside, I would have gone long. Since we broke on the downside, I took a put here, and this was the expiry day, right? So you need to be quick in booking profits. I booked my profits at the first target to be safe. I put 600 here and covered here, got about 80 points. Yeah, if you're in profit throughout the day, you can wait to see if the second target hit, and it hit beautifully. So, but I didn't want to wait as it was expired. If it was any other day, yeah, definitely I would have waited for the complete test of targets. Now, how do you know if this target is reached and it's reversing and it's not going down? It purely on the price action itself. See, this was in 5 minutes. It was such a strong bearish candle, so there's more likely. It's more likely to break the support than reverse from here. It broke, touched this, and reversed. Right now, how do we know if the trend is reversing based on price action? There are certain important candles. I'll be coming up with a video on that price action based on certain candles. Please stay tuned for that. See this inverted hammer. Okay, see when the price came up here, I had drawn this horizontal line. Okay, and again the price came up here. These are working trend lines. You don't have to mark and keep it. Like as the day progresses, you can do it and remove them at the end of the day. Only the major support and resistance you mark and keep for a longer period of time, which will help you. So this was just a working trend line for the day. It came here, tested this high. I had marked this, then I had marked this. So when this up move came and this red candle came over here, it's like a bearish candle, right? Like a bearish engulf, not an engulf. Engulf is when the full candle is. It was a bearish candle. So I was looking for a short, and always trend line breakdown is very important if you're trading in options. The momentum that you get when a trend line breaks is huge. See, you can't trade options for this up move and this down move. Though the market fell from 32,700 to 500, but over here your options wouldn't have moved up a lot. Probably in futures, yeah, you can sell options and probably you can trade this in futures, but if you're buying options, this wouldn't have got you a big move. But whereas this trend line, if you had shorted options here, this would have given you a lot of profits. So coming back over here, when this red candle came, I drew this red trend line. I was waiting for a short. I was more convinced it's going to now reverse is because of this price action, the inverted hammer. It was a very bearish price action pointing down at a resistance. So I was hoping we're going to dip, and we did dip, and I wanted a more confirmation of a trend line breakdown. See, I entered here after this price action, but if you're starting, if you're new, or if you're a little worried whether you're taking a right entry or not, you can wait for this trend line to break and then enter. Since I entered here itself, it's more like a double top, and we are getting a bearish price action, inverted hammer, like a shooting star, and this trend line breakdown gave me more conviction to stay in the trade, and I booked my profits over here. So this is how you can use it, even use trend line support and resistance even in the intraday trading. Now coming to the previous day on May 11, what happened? See, we had a huge gap down, right? This is where I expected the market to reverse. Okay, see, we gapped up. Okay, we actually went long here on this day. See, I had these two black trend lines marked the previous day. Like you need to mark all your levels the previous day and be ready with your study, right? So I had this line and I had this line marked. I also had this line marked. So since we are expecting a gap down, I was expecting a gap down in these areas. So I had these 4 trend lines marked for the day for May 11th. So what happened on May 11th is we gap down and see this price action. It's like an hammer at the bottom of this trend, which is very bullish. And from then the price started going up. So I didn't immediately enter here because we have gapped down how many? Almost like 400, 500 points we gapped down. And the news and the global market was bearish, so there's no point immediately jumping in a trade, right? When you're gap down, probably something is wrong. The market knows that, which we retailers don't know about. So we'll have to wait and watch what the price action does. So when this opening came, a huge hammer, I wanted to go long, but because of the gap down, I was just holding myself like, let's wait for further confirmation, because it's not good gapping down 500 points and then expecting a big up move. See, obviously nobody didn't expect this. Even I didn't expect this move will happen on this day. I kind of expected, my preparedness was gap down, come up probably until this level or this level, and from here go down. But the price came until here and then reversed, right? So we can be prepared with our study, but we'll have to take trades only based on what the market does. So we opened here, okay, we went up, we opened here, we went up, came down, again went up, right? So I entered over here long. See, because we gapped down, we went up, we came down after this green candle. So basically this line that I had drawn based on the previous day acted as a support. So I entered at half of this green candle and kept this black line as stop loss and kept this as my first target, okay, and this as my second target. Now let me just do a small replay and show you why I booked profits here and not here. Let me put this here and increase the speed a little. Okay, I'm using TradingView so that I can do some back testing with. This is nothing but I'm just doing a replay of the price action. TradingView allows us to do that, go back in time and replay the price action. So as you can see, the market opened. See, this was a very good chance to go long actually. Probably a very experienced trader, like years together in market, definitely would have gone long based on this price action. But I'm a sort of a safe trader where I look for double confirmation and then enter. So I waited. See, we went up. So this is what it looked like in the real market. Okay, so at this point when we got this reversal, so I was kind of sure that probably we are reversing from here. See, I could have gone wrong here. The price could have come up here and again fallen. Okay, that's why we also set a stop loss, which is very important. So I entered here and kept this low. I entered at half of this candle because I remember taking 32,800 call. So I always go in the money, not out of the money in options. So I took a call here and kept this as my stop loss, 30-point stop loss on the spot chart. Then what happened? We got a pretty good follow up on the upside, and this first black line on the top side was my target and this was my second target. Okay, see, as you can see, let me just go back a little. Sorry. See, when we are getting a up move, this was my first target and this was my second target, right? So let's just see how it happened on the live market. See the kind of piercing that we got. See, if we had touched this and reversed, I would have definitely booked my profits here. But we didn't touch and reverse. The 5-minute candle only pierced through this. So I was hoping, okay, now we have pierced. The next level of target could come here. I also had this level marked. See, certain levels like this in intraday where I just mentally keep an eye on it, but the major ones, like see here how many times it's taken supports, those I mark and keep. So let's see. Okay, and again this pierce, right? So I was thinking, I started marking targets on the upside over here and over here. Sorry, I was kind of hoping that we would be hitting this target because we got a similar piercing action here and here. So I was thinking this is going to be my next target. But see what happened. Yeah, it's because of this we booked the profits here. See, I didn't book my profits right at the top. Nobody can do that unless probably you're the most precise person in the stock market. See, I didn't book my profits here, but I booked my profits after this red candle. And this price action looked like an evening star. So as mentioned, I'll be coming up with videos on the price action as well, the morning star, evening star and hammers. So this price action, which was like an evening star, a bearish price action, I booked my profits immediately here when this candle was formed, because we have come down below the support, okay, and we are at a resistance and we have broken this resistance line, come down. So I immediately booked my profits here and took a shot actually again. Let me show you how it played out. And this is where we shorted again. See, the price came down, it went up, tested this resistance line that we had drawn, it acted as resistance, and I was kind of hoping that we might get some dip. So after this red candle I took a shot and kept this as my stop loss, 30,900. I had taken 3100 put, and we did get a pretty good down move after that. And my targets were the same black lines that I had marked. I wanted to book my profit here, but we came out somewhere close by here. Yeah, and this is where we booked our profit. After that, price did go down more, but that is fine. See, in stock market you cannot catch 100% of the move. Say for example, the price moved from here to here. However good trader you are, whatever strategy you use, or whomever you follow, or whatever teaching you know, nobody can catch this full points. Okay, if you can, probably they are the gods of the stock market. But if you can catch 60% or 80% of this move, that is more than enough. You catch like 80% of this move, more than enough. You catch, say, see the trend looked like an upward trend, but it reversed. So on the reversal, you need to be, when you're against the trend, you need to be quick in booking profits. So the fall was, say this you caught until here, or even half you got out here, 50%, it's more than enough. So we booked up profits here. So we got one good trade on the upside and one good trade on the downside, and we were done with our trading for the day. I usually take about 2 to 4 trades, that's it. Within that, if all 4 trades are lost, I stop for the day. That's the personal rule that I follow, and having such small rules really help in the stock market, you know, to control your losses. Now say there are days where all my analysis went wrong and my stop loss keep getting hit, so that's why we keep stop loss in all the trades so that we don't lose too much of capital. And let me go ahead and close this. So having a stop loss on whatever strategy you have, you might come across somebody saying this is the world's best strategy, and without stop loss nothing will work, you'll just gonna lose your money. So we keep stop loss in all our analysis and on all our trades. So based on that, we have been trading, and I trade only mostly on this support, resistance and trend line breaks down. I've put up my analysis for Friday, May 14 trade. Please do have a check on that and watch that as well. It's purely based on support and resistance. And see, planning is one thing and what market is doing is another thing. You can plan for something and market can completely do reverse of it. So these trend lines, support, resistance will help us to determine, for example, this day. See, after this move, I was really bullish. I had marked targets here and here, hoping market is going up. But the moment this price action came and reversed on the downside, we changed our view and we took a short position. So planning is one thing and what market does is another thing. Market is always right. We'll just have to follow what market does. But this trend line helped me a lot for re-entering. I had this trend line marked based on previous resistance and support. So on this retest and this bearish price action at the low of this candle, we shorted and got this entire move. Obviously, when we shorted, I didn't expect such a big move. I was thinking we will take resistance here because there's some resistance here. There's some. So I was hoping we will take resistance in this trend line, but we broke. We kind of look like we're taking because these two hammers. Then we broke through. So somewhere here we booked up profits. So this is all about using support, resistance and trend line, the most basic and the simple technique which can be used in intraday, which works beautifully. And make sure you place the right stop loss. Okay, if your stop loss hits, there's nothing wrong in re-entering, but make sure you have a stop loss. So this will really help in trading. Thank you guys for watching this video. Hope you like this video. I'll be coming up with another video where based on only price actions. Please do check that and follow us on Instagram. We post all our profits on Instagram. And please do check out the video May 14th analysis, Friday analysis. Thank you.